Hello, good day. Welcome to another episode of the Housing Market Update. We have went over many different cities and metros recently throughout the United States, and we will continue. I will continue to do housing market update in many cities and metros on a weekly basis, on a daily basis. So thank you for attending. And the purpose of me doing this Redfin updates, housing updates, is to educate and inform all of you guys out there in the YouTube world, in the US and overseas, whether you are a primary homeowner, if you want to buy a owner occupied property in a specific area that I'm going to talk about, and also if you are a real estate investor, out of state or otherwise, trying to buy a rental property in a particular marketplace, I'm here to help you. If you are a investor trying to buy a vacation home, retirees in certain areas of the country, I can help you as well. So yeah, mainly our focus is single family homes, although sometimes 2 to 4 units are also a possibility. All right, so thank you for attending. My name is Si Wing Yi from the Yi Real Estate Network. For the past 20 years, I've been running a real estate investment club here in the San Francisco Bay Area, and we have guided thousands of real estate investors, mom and pop, regular folks out there from all over the country and the world, but many of them are in California, right? So to buy out-of-state turnkey properties in many great affordable markets that can cash flow with 25% down payment typically. All right, so we have done a lot of deals, especially in Central Florida. Central Florida is a location that we have a lot of experience with. We have a network partners in the local area that has been helping our out-of-state investors to buy great cash flow properties in the Central Florida area. So for the past 20 years. So our investors have enjoyed massive wealth long-term purchasing these great homes in this market. Right, so without further ado, so let me share my screen and let's start with, okay, this is a Redfin updates, and let's start with new listings, all right? So new listings, by the way, as you can see, the blue line is 2019, the red line is 2020, and the orange line is 2021, and the black line is 2022. So we are talking, this is the year-to-date ending date, August 21, 2022. So let's look at the trend, and by the end of this video, of course, I will give you my opinion and my recap as to what's going on in this metro, Central Florida, and so you can make an informed decision. So without further ado, right now, we talk about new listings, right? New listings this past month, there are 1,114 new listings, and year over year is almost a 9% less listings year to date, year over year from 2021. As you can see, the orange color is 2021, and ever since ending date July the 3rd, we have seen less and less listings. So we have to look at the back then. There were 1,425 listings as of July the 3rd, and which is 15% year over year from 2021. So we have seen some downward trend from July to August, and let's see for the next few months how this trend line will transpire. All right, so and let me see what else going on here. And compared to the previous year, like I said, we have increased listings, like it's 50% from 2021, and from 2019, before the pandemic, there were 1,000 listings. So far, the listing has been fairly stable the past 3 years, except this current month. So we have to watch over that. So let's look at the active listings right here to see for the entire year, what has been the trend with the active listing and the 2022. Wow, we have seen there are a little bit more than 9,000 active listings in Orlando metro market. So it is an increase of 38% over 2021, which is right down here. So very, very big increase, 38% increase of overall listings compared to last year. And then if you look at, which is very, very significant. By the way, I did not look at this data in advance. So the information I'm getting right now is for the first time, so we can be very spontaneous. So in 2019, there were 11,381 listings. And then the red line is 2020. There were 10,048 listings, 12% less than the previous year. And then 2021, there were very low listings last year, 2021, 6,482 listings, which is 35% less listings than over 2020. And then all of a sudden, these past few months, actually from ending date May 22nd, when the interest rate has risen significantly, around April, we have seen some really high uptick in the active listings. So that tells me that the demand has taken a step back, because the demand of housing has taken a step back, and the listings causing the listings to be fairly in an upward trend, as you can see. All right, then now, so let me see. The next thing I'm going to do is to look at the pending sales, right? And this will be interesting. Pending sales. Well, yeah, pretty normal trend so far. Nothing that looks out of the ordinary. The pending sales are sales that are under houses that are under contract by the buyer and seller. So as of August 21st, 2022, there were 819 pending sales, which is a 17% decrease year over year from 2021. And if you look at the peak right here back in April of this year, there were 1,000 homes pending sales, which is 0.6%, almost similar to 2021. And then we're seeing gradual decrease in pending sales. So again, the demand has decreased due to the rise, and the inventory is slowly creeping up as well, causing this trend line. But nothing really significant. So remains to be seen. So let's look at price drops. Price drop means how, the initial listing price by the seller, and given the low demand, perhaps they are still listing the homes way over what the market want to buy. So therefore, let's look at the percent. Now price drop means from the initial list price, what was the actual, how many list price have dropped their prices in order to attempt to the sellers try to sell the house. So percent of active listings with price drop is for this past week is almost 10%. So if you calculate on a monthly basis, so there are about around 40% of the active listings has a price drop, which is 4% higher than 2021. In 2021, the percent of active listings with price drop is only 5.7% on that week. So therefore, times 4, which is around 20%. So last year, during hot housing activities in this market, there were only around 20% price drops from the list price. But this year, again, as a result of the decrease in demand, the sellers are not getting the memo. But as you can see, however, if you look at August the 7th, we're at the peak of the percent of active listings with price drops. Then August 7th right now, in the past couple of weeks, we have seen a decreasing trend whereby the price drop has been decreasing. This means that the sellers are finally understand that the demand is not as great as before. The interest rate rise, so they have to when they initially list their price for sale, they kind of listed it in a way that it just meets the buyer's expectation. All right, so remains to be seen where this trend is going to go in the next few months, or for that matter, for the rest of this year. Right now, it's the beginning of September, October, November. So we have 4 months left to go to the end of this year. So it remains to be seen. So yeah, so price drops, how much is price drops? We do not know, maybe 5%, maybe 7%, depending on the neighborhood and the block on the house. So it's to be determined. All right. And then now let's look at the medium sales price. So the medium sales price right now is $387,000, right? Which is still a 16% price increase year over year from 2021. So very, very significant, very huge price increase. And then actually, let's start from 2019, before the pandemic. 2019, the median sales price was only $260,000. Okay, then 2020, when the pandemic began, the median price has increased to 288, which is 11% appreciation increase from year to year, from 2019 to 2020, and then this huge jump from 2020 to 2021 is a whopping 16% price appreciation increase to 334, and then from 2021 to 2022 currently, another 16% price increase, and the median price right now is 387. So from 260 to 387 in a mere 2.5, 3 years, this is a whopping equity gain for those people that pull the trigger in the Central Florida market. So again, I congratulate real estate investors that purchase at the somewhat at the bottom here for 260K. I'm sure at that time the rent, when you buy it, the number makes sense. When you bought it at 260, hopefully the rent at that time was maybe around $1,700. So you put 25% down payment, you should cash flow a couple $100 based on 260 price range. Now, because of the skyrocketing prices in Central Florida and Orlando, now the median price is 87. For mom and pop real estate investors, our investors also, it's very, very hard to cash flow because the rent, we have seen skyrocketing of rents as well. But if an out-of-state investor would have purchased a house in this market right now for 387, the rent is only going to be like $2,000, $2,100. So you're not going to cash flow. The yield, the cap rate is too low. It's way below 4%. So right now, for mom and pop investors who are armed with a 25% down payment, giving the 6.2% interest rate you might have to pay as an investor loan, you're not going to cash flow. So that's sad. But for owner-occupied buyer that want to move to this location, or a local buyer that want to buy a single-family home to live, 387 is a very good price. It's still very low price on a square footage comparing to the rest of the country, because Central Florida have been consistently increasing their prices over the past 20 years, really, like from ever since the market, the real estate crash in 2008. Orlando prices has been increasing consistently at 3 to 5% per year for the next 10 years until 2019 and 2020. Then when you see this, 16% plus 33%, we're talking 33, almost 40% total price increases, appreciation, 40% from 2019 to 2022. So it's amazing. So if you bought early, you're in great shape as an investor. But now, as a mom and pop investor, I do not necessarily recommend for you to target the Orlando metro. At least what I'm suggesting you should target is going to the suburb, spread into the suburb. Suburban growth. Central Florida is very, very huge. So if you go like 30, 40, 50 miles to the north and northeast and to the west and to the south, there are many more opportunities where you can buy an investment property for less than 387K, obviously, hopefully for 300K, around those price range. You can collect rent at 2,200. So you should cash flow at 25% down payment with a current 6% interest rate, for example. All right. So again, owner-occupied buyers who are migrating from other part of the country, from California or from New York or from Chicago, wherever, 387K is still very affordable. All you need is like a little bit less than $100,000 of salary, W2 income, if you will, to qualify to buy a primary home. So Orlando, Florida is going to grow, consistently grow, because it's a great weather, no state income tax, population growth, job growth, and migration, people migrating into the Florida areas quite consistently over the years, especially during the pandemic, right, with the remote work and all that. Right, so let me see what else I need to go over. Let's go over the average sale to list price, all right? To see what's going on. Average sale to list price. This means that, wow, this is interesting. So right now, average sale to list price is 0.98%. That means the final list price, the buyer have able to consummate a price which is 2% less than the sales price. So the buyer have a slight upper hand. They're able to negotiate for a lower purchase point based on the offering price. So as we can see, is a tremendous steep. Okay, so the asking, the days of multiple offers are all over. We all know that, right? So from the peak of April, May, whereby is a significant bidding war at that time, multiple offer situation, all the way through the first quarter of 2022, right? As you can see, where buyers are bidding like 1 to 2% over asking price. Then, since the interest rate has decreased substantially, as we are all aware, then since April, we are seeing the asking price are lower than the final sales price. So, and the trend will continue. We'll know what's going to happen. So this is so there's some a minor correction in this market. Nothing to be concerned about in terms of actual prices going down. I don't foresee maybe 3 to 5% reduction of price. I don't see a more than a 10% reduction of actual value of a home throughout this year. All right. So based on what I've seen, and let's look at the another important metric we need to go over is the month of supply. Right. Now, month of supply is anywhere from 5 to 6 months of available month of inventory. It dictates a seller's market. I mean a balanced market, right? Where the demand or supply, the supply and demand is at an equilibrium, right? Now, if anything less than 5 to 6 months, you're most likely going to still have a seller's market where the seller dictates the transaction. So let's go look over the month of supply. I'm looking at this for the first time. So let's look at again current date, the 11 weeks supply of inventory. So 4 weeks divided into 11, we have less than 3 months supply of inventory. So with that said, 3 months supply of inventory is still very much a seller's market. This means that homes are still selling very competitively. Most likely there are 1, 2, maybe even 3 offers per property. And so the sellers still have the upper hand. Not to say that you can overpay the asking price. That's not happening. So the buyers still have some sort of negotiation power at this time. But we have seen the trend, right? At around here, back in March 2020 of this year, there were only like 4.8 supply of inventory, 4.8 weeks. We're talking, wow, we're talking barely over 1 month's supply of inventory just a mere few months ago, like 4 months ago, 5 months ago, right? Similar to 2022. So, I mean, to 2021. So, see, 2021, the entire year 2021, there has been extremely low supply of inventory, right? A little bit more than a month. That's why we're seeing multiple offers. We're seeing 10 to 20% of prices of over asking of homes sold over asking 2021 with multiple offers and bidding wars and what have you. That's why the appreciation has skyrocketed in the past 2 years in the Orlando Central Florida market. But again, since the interest rate has increased the last few months and the demand has subsided of homes to buy by the buyers, a lot of them can't afford it, whatever, and then more sellers they're panicking, they want to sell, they have a FOMO situation, FOMO, fear of missing out. So they want to rush in and try to put the house in inventory in a market. It's not selling that quickly. And so because of the demand has subsided, and so you can see the inventory has increased from 1 month, like 4 months ago, to like 3 months supply of inventory. So very interesting to say the least. So I think I'm almost about to conclude this presentation. So let me give you a takeaway. So what I've reviewed so far indicates that the Orlando Central Florida market is still growing pretty modestly. I do not see a significant price drop, maybe 5 to 10% price drop based on the current environment of the market, especially if the interest rate maintained at the 5 to 6% level. You know, we can see the trend line to be pretty consistent, nothing out of the ordinary. So I don't see a crash for sure in this market. The supply still still very, very limited. Inventory is lacking, and the demand is moderate. However, if the interest rate for any reason goes down, may not be this year, maybe next year sometime, who knows, to like 4% to 4.5%, you're gonna see a lot more demand. People are staying in the sideline. They can come back into the market, and you will see a lot of buying activities, and the supply of inventory is clearly lacking because the sellers are sitting on their low interest rate on the homes. Many are not willing to sell anymore, right? Because they lock in at the rate at 3% or less. And they're not going to sell and buy another home for 6% at a higher price home and pay 50% more on a mortgage payment than they already have. So, plus the new builders are not building anymore. They are pausing new construction due to a lack of demand. And any remaining inventory the new builds have, they try to get rid of it. They're offering some discount to buyers. They're offering some incentive to the buyers so they can close out their books, year-end books for the builders. So builders not be constructing, and the sellers are sitting on their low lock-in 30-year fixed rate, low interest rate. So I foresee the inventory is going to continue to be very low in the Central Florida market, given this is a very affordable market. From two, from from 260K median price 3 years ago to like 387. Still a affordable market in Orlando, so you still have a lot of top. Orlando, Central Florida has to be in the top 10 fastest growing market for the foreseeable future, because a lot of retirees and a lot of millennials, and a lot of companies, a lot of jobs are moving into Central Florida because it's a very affordable place to live. So I think the Orlando market going to weather some storms, and so for investors, it's going to be hard for you to cash flow in this market. You're a little bit late in the game. Like I said, I recommend you go into the suburbs. So we have our network of turnkey providers in the suburban areas outside of this Orlando metro. They're offering cash flow homes for us investors. So if you want more information about investment opportunities outside of the suburbs of Central Florida, just go ahead and click on my website below and put your email on our newsletters. You can receive weekly emails about what's going on, about opportunities. And also, I would like you to click the like button, and click the subscribe button so I can increase my YouTube algorithm to increase my channel. All right, so hopefully that will help you. Hopefully you'll receive a lot of value from this video presentation, and I will see you next video on another market this coming week. Thank you so much. This is Siren Yi. Have a nice day. Bye-bye.